Hello and welcome to 2014. I'm Adam Zerker with HZJanuary Capital Management. 2013 sure flew by, didn't it? With this 2013 annual recap, I'll discuss some of the important events of the past year, and I'll discuss what investors might see in the weeks ahead. 2013 was a banner year for the stock market. It also marked the 5th year of the bull market. Despite a lot of volatility during the year, equities performed very well, giving S&P 500 its best year since 1997. For the year, the S&P was up 30%, the Dow gained 26.5%, and the Nasdaq was up 38%. The U.S. economy also ended 2013 on a high note. GDP, a measure of economic activity, grew an estimated 4.1% in the third quarter, the fastest pace in almost 2 years. We don't have data on fourth quarter GDP just yet, but some economists believe that we may see a sustained GDP growth of 3% in 2014. The labor market also improved significantly in 2013, with unemployment dropping to a 5-year low of 7% in November. Payrolls increased in October and November, and weekly unemployment claims fell in the final weeks of December. What's even better is that recent hiring trends show that job gains were spread across both low-wage and high-wage sectors, meaning that more Americans were able to find good-paying jobs. Company earnings also rose for the 4th straight year. Total earnings for the companies in the S&P 500 are estimated to have increased 5.4%, which paints a pretty hopeful picture going into 2014. Investors were willing to pay higher prices for those earnings, pushing PE ratios, a measure of stock values, up to an average of 15.4 by the end of the year. By that measure, stocks became a bit more expensive in 2013, but PE ratios are still below their 20-year average of 16.5. Political gridlock in Washington created some market volatility in 2013. While budget showdowns have historically rattled stock markets, investors didn't seem to be bothered by Washington's most recent shutdown. Despite dealing with a 16-day government shutdown, investors stayed pretty calm and markets rose sharply in the period immediately following the budget deal. Some estimates put the total cost of the shutdown at $2 billion in lost productivity, plus the cost of ripple effects across the economy. Fortunately, a bipartisan deal reached in December promises to remove a lot of the uncertainty that hung over markets in 2013. This deal alleviates a new round of sequestration cuts and also stabilizes government funding through late 2015. Though politicians will still have to tackle raising the Treasury debt ceiling in early 2014, we can hope the bipartisan good feelings will help avoid another showdown. The Federal Reserve was also very active in 2013, and anticipation of a slowing in quantitative easing drove a lot of volatility. The Fed bought $85 billion in bonds each month in 2013, a move that was designed to hold down long-term interest rates and encourage spending and investment. After months of anticipating, the Fed finally announced a reduction in the pace of their bond purchases at their December meeting. Markets rose after this announcement because investors viewed it as a vote of confidence that the economy is showing signs of strength. Looking ahead, we're optimistic for a bright 2014. It's possible that stocks will slow their pace of growth, but we think there is considerable upside potential if the U.S. economy continues to gain some steam. While a pullback is also certainly possible in the next few weeks, as investors consolidate their positions, January has historically been a pretty good month for the markets. Although it's not possible to predict any market trends with accuracy, we're always on the lookout for new opportunities for our clients. Well, once again, this is Adam Zerker with HZJanuary Capital Management, signing off on Friday, January 10th, 2014. I hope you've enjoyed our quick recap of the year, and all of us over at HZJanuary hope 2014 is a fantastic year for you. As always, we'd love to hear from you. If you have comments, please leave them in the section below. If you have any questions about what you heard in this update, or if you'd like to discuss your personal situation, please give us a call at 419-425-2400. We'd love to hear from you.